Eric Mwathe, themother.com weekend analysis for the weekend of April 18th, April 19th, 2015. Let's take a look at how markets closed on Friday. We see we had down day, the Dow down about 1.5, Nasdaq down 1.5, S&P 500 was down about a percentage point. We see that crude oil was down about 1%, and the VIX was up about 10%, but off the highs for the day. Let's take a look at the Nasdaq here and see how it is trading. Nasdaq was down about 1.2% for the week, but what we can see here is there was another breakout attempt trying to break out above 5,026.42. That breakout attempt seems to have failed, and we also see that on the weekly RSI, the line we've been watching has come into play again, with the market showing another weekly resistance on the top side of that line. Now we've come back to the bottom side of that wedge. What is going to happen next is going to be interesting. If we break below that, expect another big down week or so. Otherwise, if we recover, we might eventually find ourselves breaking out above that wedge. So this wedge, in my opinion, is what is in play. Market is setting up for the next big move in terms of a swing direction, so we need to keep vigilant of that developing situation. Take a look at the daily for the Nasdaq. Of course, we had a big down day because the RSI dropped below 50 on Friday. But what is interesting is that even though we had a big down day, the market has come back to an interesting place where the daily RSI could offer support. Even with another 1 or 2 down days, the market could still offer support in this general area. So I think we have to be careful here to think necessarily that the market has to go down. It can very easily find support on this very simple line connecting the lows. Keep in mind that there's another trend line in price. If you draw it like that, the market is still back to that range. Also, we are trading around an upward sloping 50-day moving average. So lots of things here do indicate that yes, the market was down on Friday. They could be down the next couple of days, but the markets are not broken by any means. Let's take a look at the Dow Weekly, and we begin by taking a look at the breakout attempt. The market did try to hold above 18,140 and failed, so that's a failed breakout. Could be a problem. But we come back now to the question of this developing wedge. Eventually, we are either going to break out for a nice move higher or break down for a push lower. We've come here this week and we did see resistance on the line we've been watching, which makes a lot of sense. Now, if we go to the daily, we can see that as of yesterday, some of us were thinking the market was stalling around here because the market on the Dow came back to the top side, and I should have a video with a description of why I thought the market was going to pull back after Thursday's close. The reason was I saw this resistance here on the Dow, suggesting that that resistance could suggest the market could pull back. That was one reason. And also, if you take a look also now, just like the Nasdaq, after this down day, we are back to this support line. This line has been holding the Dow whenever the Dow has been coming down the last couple of weeks. So we are back to this support zone. If we hold, the market should be okay. If we take a look at the Dow Hourly, now here's the reason why I was thinking after Thursday's close that the market was poised, or at least was showing resistance. Keep in mind that we've been trying to break out here, but the RSI has refused to budge. So this resistance here was tested on multiple occasions over the last week, and finally the market just gave up and we see this big drop. Now keep in mind that this big drop has just brought the Dow back to this support zone here on the hourly. So on the hourly we might see a bounce based on this, which might explain why we had some sort of recovery in the last hour. We are also back to a line of support here on the Dow. So what I am saying is, based on the analysis here, and without being, I'm not picking sides, just based on the information in front of us, I think this market is actually showing support. Now, I would change my mind, and we need to change our mind if we break below this price channel which is holding, and if we break below these two lines. Right now, those levels are holding, suggesting the market is still very healthy. Let's go back to the Dow daily. This big drop, this one-day big drop, can be explained because of the Dow moving below 50 on the daily time frame, as you can see here. So that's the reason why the market saw that big drop. We go to the S&P. Actually, let's take a look at the Dow 30-minute chart. I want to explain to you why at this level here I was thinking the market was gonna stall. The reason why, and I'll have a video in the description, the link should be in the description, is because of this simple RSI resistance line on the 30-minute chart for the Dow. So we came here as of Thursday's trade and throughout the last week, and the market has been stalling here on multiple occasions. The more we stalled, the more we came back and stalled again. The thinking there was that more than likely the market was going to drop, which is what happened on Friday. We can also see that there's another way to look at this, which is off the highs. These highs here on the Dow, we had seen a break on this 30-minute chart, and this break took place here. So that break point was there, and if we draw a line from there, we can see that the market has seen resistance once before here and again here over the last couple of days. So the pullback on Friday in some ways was well telegraphed by the hourly and the 30-minute chart for the Dow. Again, I'll have a link with a video explaining why I thought the market will pull back as of late Thursday this past week. Let's take a look at the Dow Transport Weekly, and a couple of things here. We are just about to break this trend line here, which is this huge wedge going back to 2011. So if this breaks, this channel breaks, that's not good. Also, we closed just a tad bit below 8649.32. That could be a problem, but it's not broken yet. I don't think I would call that a break. It needs to be trading somewhere here for us to call that a decisive break. So not yet. It's trading just where it needs to find support. Whether it's going to find support on that line or this line remains to be seen. Also keep in mind that we was expecting this to offer support, this line here. This line has been very good actually at telling us when the market broke out here in 2013, which was this nice entry, and after that breakout we can obviously see that the market went on a nice run on the Dow Transports. Since then, since this breakout here, I've been talking about this being support. Every time the market has come to that line with uniform activity, it has bounced higher. We came close here, we touched it with uniform activity, and here uniform activity bounce, which is this lows here, and now we are on this line. So I think we haven't broken that support line. So my thinking here is that as long as that line is looking good and the market hasn't traded below this line, I'll give the market the benefit of the doubt. Alright, let's take a look now at the Dow Transports, and we're taking a look at the daily. And on the daily, just want to show you that this band of support here continues to be in play. In fact, we've been holding here on multiple, ever since the breakout here, this has turned into support. As you can see, all this has been the market coming back here showing support on multiple occasions. So as long as that's the case, we have to assume the market is okay. It happens to be a level around an upward sloping 200-day moving average. So we have to be careful to call this market broken. We have to see more evidence before we can take the opposite side of this current market bullish trend. We take a look at the S&P 500 weekly, just like the Dow and the Nasdaq. We seem to have failed to hold above the previous weekly closing high. So the breakout for this week has failed, and the market needed to take out 2,110. That failed. RSI just looks like the Dow and the Nasdaq. So eventually this wedge is going to break out for a nice move higher or break down for market to be dropping. Let's take a look at the S&P 500 daily, and just like the Dow, As of yesterday, we came back to this declining line of resistance. This line here connecting the tops on the RSI now seems to have given us short-term double top, which might explain why the market was down. Keep in mind the market was down substantially, relatively 1%, because the daily RSI moved below 50. Eventually the market is gonna find support or break below this support on the lows line here. You can see that we can even take 1, 2 more, 3 days down before we find good support here. So the market can take some more downside and still be okay. And even if that was to not hold, there's another line, which is the green line, where the market has been bouncing. So this is, I would call it, last line of defense here. Ever since we made these lows, market has been using this for reason to bounce. So double bottom here, we bounced, we held here, we bounced, we held here recently, and we bounced. So this is where will be last line of support. As of right now, again, we can take 1, 2 more down days and still hold this very simple support line. In other words, the market looks okay, in my opinion. If we take a look at the S&P 500 hourly, we can see that the market has just come back to this line where it has been bouncing on this green line. If you take a look at these lows here, they happened exactly on that line, and on and on. So this is where the market has been bouncing. Most of these lows have been taking place. As you can see, we recaptured above that line here for a nice move higher. We captured above the line there for a nice move higher. We held here, market moved higher after that. Eventually we hold here for a nice move higher. So this is where the market has been bouncing. Even here, the market made a low. So we are back in this general area. If we can bounce above that, then the bulls are still in control. Let's take a look at Apple. And Apple on the monthly continues to trade with its RSI, still trading above 69.10, which is a sign of strength. The level to watch if you want to wait for the breakout, if you want to wait for momentum, is wait for it to move above February's monthly closing all-time highs, and that would be at a price of 128.46. So if you want to wait for momentum, that would be the level to watch. Otherwise, if you want to buy a pullback, the market has come back to a place of pullback possibility. You just draw a simple line connecting the lows like that. You can see that this could easily be where it finds support. Otherwise, if it breaks through that line, maybe it has some more downside to go. Otherwise, this looks good in my opinion. We're also trading generally around an upward sloping 50-day moving average. So this daily chart, in my opinion, could easily hold based on this lows line. Also, if we take a look at the hourly, we can see that if we go back to about 6 months worth of hourly data, so on the hourly, draw a simple line connecting the lows like that. You can see that the market connects with this line connecting all these lows. Double bottom here, and now we are trading exactly there. Obviously, this is where you would expect the market to find support and start moving high in price. There with the Apple closing at 124.75. Otherwise, gotta be careful in making assumptions, because if we break below that on the hourly, then there is more downside. Otherwise, looks like the market could bounce on that simple line. Let's take a look at the VIX. On the VIX daily, if I can find it. All right, so on the VIX daily, of course, the market was up for the VIX about 10%, but if you take a look at where it closed, the close was bearish for the VIX, bullish for the market, because if you take this line connecting the daily closing high, so daily closing high somewhere here, and a daily closing high here, and a daily closing high there, you can see that it closed exactly at that line. And also we see that it is back to a level where it has been showing resistance. So this, if the VIX is to move higher, it needs to take out that line of resistance. As of right now, this line is showing resistance right there. So to me, the VIX is not looking strong. Also, if we take a look at the VIX from a hourly chart, you'll see that the VIX is struggling. If you take the highs, this line connecting the highs and extend it, we came here during the day at the lows of the market lows, and the VIX did show resistance there. So I think for my money, this tells me that the VIX is stalling, the general market is good. Now, of course, if the VIX can break out above that line, then we have to assume that the market is in trouble. But for now, the VIX by itself is telling me that it is stalling. In fact, if I take a look at a clean chart for the VIX, let's take a look at a clean chart so we can bypass all that stuff. Oh, let's see here. So this is an hourly chart for the VIX. I'm using a period of 26. Just want to show you why this is telling me that it stalls. Ever since this short-term break here in the VIX, which is off these highs, the VIX has been stalling. Just draw a line straight out of that. You can see if you use this to go along the general market, you had a chance of at least riding the bounce in the general market. And also recently here. In fact, if you back test this line backwards, you can see that this also gave you resistance in the VIX, suggesting that the general market was a buy. So if you're looking for a reason why this market is more than likely going to bounce, this is the reason right here, that the VIX has given us resistance, and more than likely this suggests that the general market is back in play for a rebound. Now, there's another way to take a look at this, is you take a look at the SVXY. So this instrument is inverse the VIX. It goes higher with the general market. If you draw a simple straight line connecting this instrument here, SVXY, you can see that this simple line did come in contact with the support right there. So as of close of Friday, we can see that support has been observed exactly where it needs to be. So this is telling me, without knowing what the future brings, that this support has held. We should expect markets to continue grinding to the upside unless, and this is unless, for some reason we break what has been support line. Alright, so if we take a look here in wrapping up, we see that S&P 500 monthly is showing a failed breakout on the monthly, yet we have good action on the monthly because the monthly RSI is above 69.10, barely, but it is above 69.10. We take a look at the Dow. The Dow as of right now also did fail to hold above the previous monthly closing high, so that breakout attempt has failed, and the Dow is trading below 69.10, which could be the beginning of a problem here, but it's not the worst. We'll see how things play out. Take a look at the Nasdaq. It too is showing as of right now a failed monthly breakout attempt, but we did close the week with the RSI still trading above 69.10. So yes, the markets were down Friday, and you know, it's hard to sometimes tell what the market is doing. Market's always going to have tricks, but I think if I was to summarize this video, honestly, the market did close okay, and as long as the market is showing support, potential support on the daily, and as long as the hourlies have confirmed support on some of the charts we've discussed, this market looks okay. Otherwise, for subscribers, I will be sending you part 2 of this weekend's market analysis sometime during this week. For everybody else and for all of us, let's have a great weekend. Eric Mwathe, good luck, peace, and blessings. EAC